Trade conditions coming under pressure in December, seasonal impacts as well. And when you look at the month of January, we know that it's a big import month for the country. So how do you see this trend playing out over the December-January month?
There would definitely be an improvement in January. In December, the survey reflects the fact that a number of participants in the trade environment are closed for business or operating at levels of subdued activity. So it's clearly the retail sector that's driving any indications that we have of trade over the festive season. And that is why every December there is a decline in the survey. This year, however, we expected that the decline would not be as substantial as we'd seen in 2009, and yet it came in even worse. And the reason being is that expectations were betrayed. So it is a survey, it is subject to sentiment and feelings and those softer issues. And we've seen this time around that although there were isolated reports of strong activity, the majority of the survey participants found that activity was much lower than they expected.
It's quite interesting you mentioned that. I mean, looking at the PMI number, manufacturing, that was out yesterday, it seems that expectations as well going forward has declined slightly, still sitting above that 60 level, but has come down quite a bit. It seems that overall people are starting to become more cautious when they look into 2011. Do you think it's warranted, or do you think it's just a minor blip?
I think it's a consequence of the crisis and the pains they felt during that crisis. 2010 was still a year in which we lived with the consequences of the crisis, so it hasn't left our memories yet. To some extent, that is a positive thing, because you don't want to immediately embark on overly aggressive behavior, but we believe now is the time to loosen the purse string somewhat, for consumer confidence to rise, to meet business confidence at higher levels, and to jointly trigger greater levels of economic activity. Our expectation for the future, as reflected in the trade expectations component of the survey, is positive, and it has improved over the last month by 4 points, which is significant in the context of the survey. So there remains an optimistic outlook. It's the current difficulties that we have to overcome, the current perceptions of challenges still lurking, and the current reticence that we're seeing in the market that we have to overcome.
Well, looking at the price indices, that remained relatively flat. We've seen inflationary pressures coming through in a lot of emerging markets. I mean, as I mentioned a little earlier in the show, also UK inflation coming in higher than expected. That being counteracted in South Africa with a stronger rand. How do you see prices changing going forward?
In the current circumstance, there's no indication of price pressure. But if you look at the Trade Expectations Index, which looks 6 months into the future, there are indications of inflationary pressures building up. They won't influence us to the extent of threatening the inflation target range, but you would see some upward pressure, and you would see some drive towards maybe 4%. But that's not going to be significant. It's a characteristic that's associated with greater economic activity, and so one has to look at the upside of those inflationary pressures.
Just like the PMI number that we saw out yesterday, employment is a very big issue. Also, when you look at the trade survey, a very big issue going forward in South Africa, it seems, and we're just not seeing any relief on that front.
Yes, that was particularly disappointing over the festive season, that there was no improvement in the employment component of the index. There were reports of some permanent jobs being created, and that was very reassuring. But even if you look at the permanent/temporary employment picture holistically, which is what the survey does, there wasn't a dramatic improvement, and once again expectations were betrayed. On the upside though, 6 months into the future, we do have a positive indication on employment. The employment number jumped forward by 5 points, which again is very significant in the context of the survey. But that would require very cautious efforts on the part of business, government and labour in terms of ensuring that these employment prospects are realised. It's not a fait accompli, it's not a guarantee. It requires consistent and focused efforts on the part of all three major stakeholders in the economy to achieve improved employment prospects. Right now we're not seeing it, but the potential is there, and we have to work together to realise that potential.
We've got State of the Nation address later on in February. We've got the budget speech as well, and a big focus on unemployment. Do you think that government can get it right?
It is possible to definitely achieve substantial improvements in employment numbers. The levels that we want to achieve, the targeted levels, are generally considered to be overly ambitious. But once again, there has to be consistency of policy messages on the part of government. You can't have one ministry indicating that employment growth is the key objective and then have another ministry introduce a barrage of legislation which is going to make it difficult for the private sector to play its part in terms of generating employment. And obviously, the private sector has to be the key contributor to employment if it is to be sustainable jobs that we create.